It's remained steady, and 3 days later when we come back on Monday morning, we are handed okay kind of cues.
Oh, absolutely. And you know, the bulls are sort of rising from the ashes, right?
Yeah.
I mean, after a long time, we've got buy calls in India. But as they say, markets make opinions and not the other way around. So a lot of positive opinion coming through after the market has staged a bit of a recovery. So just wanted to first talk about the buy calls. In case you missed it, in the last fortnight, there were 3 big brokerages that upgraded India. Goldman Sachs, Morgan Stanley and Bernstein. Now, all 3 brokerages are making the same point that valuations have now become attractive in the Indian market and it's a good time to buy. It's a good time to put money into quality stocks, especially the ones that have fallen. Goldman Sachs says that MSCI India is now trading at 19 times forward PE, which is close to their fair value estimate of 18.5 times, and they have a 12-month Nifty target at 20,000. Bernstein says the same thing, that there's been a severe underperformance that India has seen in the last 6 months compared to emerging markets. Now the time has come to reverse roles. And Morgan Stanley, Jonathan Garner, upgraded India recently. Now we decided to look at some numbers to see what the underperformance has been like. So here's the data coming up for you on the screen. The Nifty has underperformed almost all its global peers in Q4 of the FY23. If you look at it, the Nifty is down 4% in Q4 of this fiscal compared to, say, Kospi, Hang Seng, which are up about 3 to 10%. The Taiwanese index went up 12%. The Dow Jones was up 0.3%, and a couple of the other markets like the Russian markets were also a tad bit in the green. So in that context, the Nifty is severely underperformed. The MSCI India index commanded a premium of over 109% over MSCI emerging markets in October of 2022. That premium has now reduced to 62.6%. So the premium with its peers, with the emerging market peers, has also narrowed, which is making it more attractive as a buy call. And if you look at it compared to its own historic averages as well as compared to the MSCI emerging market index, the Nifty is trading currently at about 17.5 times. The MSCI India index is trading at about 18-19 times, so still a tad bit cheaper. So the valuation game is something that, you know, most brokerages are betting on.
All right, well, that's about the Nifty.